Oh, I see.
Sorry, that's my
Suitable
dog
for
going
them.
crazy. Yeah, so I guess, oops, sorry, a couple.
No
Yeah,
worries.
it's certainly possible for businesses generally, and I'm not just talking about real estate. It's
Mhm.
possible that businesses will have ROICs less than WACC. That's kind of quite common. So it's
Yeah.
um it's just a case of I guess the question becomes not so much is ROIC below WACC, because it just means the managers aren't using using the assets in a way that's profitable. Um,
Mhm.
so that's certainly something that can and does happen, and
Mhm.
I guess your job as an analyst is to think about the extent to which that's likely to reverse. So, to what extent are managers likely to kind of get to a point
Mhm.
where ROIC is above WACC? A different
Mhm.
question, which I think is the one you're getting at, is ROIC and therefore WACC? G'day, Tim. G'day, Tracy. Is is ROIC the appropriate measure for a business or for an industry? And for something like a real estate business, there's a good argument that you can make that ROIC is probably not the best measure of profitability.
Mhm.
And so one of
Yeah.
the reasons why is the real estate businesses will typically have a relatively large amount of depreciation. And so the
Mm.
depreciation doesn't necessarily map into future capital expenditure. And on that basis, the kind of the numerator part of ROIC, so the your profitability measure, is going to be taken down or depressed by um, the depreciation, and it will kind of effectively give you an artificially low measure of performance from the perspective of the owners or the shareholders. And so often you'll find that for the real estate type businesses, an alternative measure of performance that is more commonly used is something like a funds from operation. So it's kind of like, really, what's the rental income that the business is generating? And you might want to compare that with either something like equity or net asset value is probably a more typical way of going about assessing performance from the perspective of a real estate business.
Mhm.
And so part of the question becomes, so what's the best performance measure? And we get into that, we kind of cover that in
Mhm.
kind of unit 5 in particular when we're thinking about sort of appropriate performance measures and ratios.
Cool. Yeah. Thank you.
Tim, far away. You're on mute, Tim.
Good start.
There you go. Oh,
Uh,
not the first, won't be the last.
yeah, so I guess just looking high level for the wording for this assignment we've got the 3 questions. Are we kind of looking to have equal word count on each, do you think? Is that a reasonable expectation?
Yeah. Did I give you wording guide for each section? I think I did, but use the kind of the wording guide as an absolute maximum rather than an aspirational guide, is the way I'd put it. Because we're required to, let me have a look. Let me just see. I'm juggling a couple of different courses, all that have assessment coming up. So I'm just going to go back and check what I've got. I didn't actually. Okay. On the basis that each are 5 marks, you can assume that they're broadly equal. If it turns out that you end up with a little bit more in, say, 1 and 2 rather than 3, I'm not going to get fussed. I'm not going to go through with a word counter on each session and say, look, you were more up by 30, down by 30, so penalise. That's, as I said, you could hopefully, you won't need the 1500. Quick question, did I put up my version of JB Hi-Fi? Have I done? Okay, if again, because I'm juggling courses, I'll just make a note. Kind of immediately after this call, I can put up my kind of draft response to this for JB Hi-Fi, just to give you a kind of guide. I'll just make a note of that now. But yeah, broadly speaking, on the basis that each of them are worth the same marks, Tim, you can say that they're roughly equal. Yeah.
Great.
But don't be beholden to, like, don't freak out if you're 600 on one and you're short on another. Yeah, not a problem.
Great.
Sorry. Okay, that's in the diary. I'll get that done.
I'm also kind of curious how much will be reused. I know we've got 1,500 words in this one. I'm not just hung up on the words, but yeah, just kind of using that to frame it. 1,500 words on this, and then we've got 5,000 for the end of assessment, or the big assessment.
Correct.
Is the expectation is that we can reuse a lot of this, or
yes? Normally what I find is if you used the full 1,500, if you just did a sort of a Control-C, Control-V, you're probably going to find that tied in describing the back half. So normally what I find is that people will take what you've done. I'll obviously give you feedback on that.
Yeah.
Incorporate any feedback to the extent that you find that useful. And you probably want to scale it down a little bit is typically what I find. So I guess two things that I guess is worth mentioning. One, I don't mind you using your own work. That's the whole idea of doing Part A, is to have that material there for Part B. And I know that that's going to get flagged in things like Turnitin. Don't worry about that. This is designed so that you build on what you've done. So certainly the intention is that you build on it, and also the conference call that you do kind of for week 8. That's also meant to be built upon as part of that. So a combination of the conference call, a combination of what you've got for Part A, all gets fed into Part B. You probably want to edit it down a little bit, I think, just to get the back half done for Part B.
Yeah, I have one question is about our feedback of the week 3 one, because the week 3 the notes is very similar to the third question of the Part A. Why did that one? I'm not sure is right or not. So if we can get the feedback before the Part A is submitted, so maybe I can upgrade this the question. It's all about this two significant accounting issues. Yeah,
it is trying to get you to think about that. That's correct. Yes, when are you handing it in? Tuesday?
I think 3 p.m.
Yeah, I'll see if I can get notes up kind of before then. I guess the idea is to get you thinking about it, get peer feedback, then you get my feedback, then you incorporate all of that into the final submission.
Oh, thank you.
But yeah, the idea is that it kind of things that you do like on the weekly stuff that I get you to do is hopefully all going to help build towards that final project. Yeah, so you kind of not wasting work as such. Yeah, Adam, anything specific?
Nothing specific. No, I just had my lunch break, and I thought I'd drop in just to see how it was all going.
Not a problem.
I'm just the only question I have is where are you posting the discussion responses for JB Hi-Fi?
Oh, I've got normally what? Oh, did I do the JB Hi-Fi? I'm going to do like I've got a Part A that. As in my version of Part A of the project that I'm going to kind of pop up. I will put that in the JB Hi-Fi section of our Moodle page, and let me just quickly click on that just to see where that is. At the moment, that's right down the bottom of the Moodle page where I've got JB Hi-Fi materials. You'll see at the moment, I've kind of got a value chain thing. I've got economics attribute framework. I've got a summary of the conference call, which is later on. But what I'll also pop in that area, I don't know if you can see that there now.
Yeah,
I'll also pop I'll pop my Part A there. So anything JB Hi-Fi is going to go in that section.
Perfect. Thank you.
Yeah. So as I said, I've got that ready to go, so I can, as I said, pop that up more or less at the end of this call. And what I normally do is I'll try and get for the weekly stuff. I'll put my JB as a starting reply post to what we've got for on that discussion forum. And I'm not. Yeah, if I didn't do that for week 3 stuff again, I can do that pretty quickly. And what you should also be able to see kind of in the assessment area is I've got some examples up there from prior terms that did well. And so you can have a look at those that obviously have incorporated that part A into the full project.
Right. So, I mean, my read on this is that the discussion components that we've already done will form a large part of this report.
Correct.
Yeah.
Yep, absolutely. And that's got to, just to make sure that people aren't sort of getting to the end of the weekend and thinking, oh no, now I've got to kind of quickly come up with 1,500 words. Yeah, it's kind of, you've done at least a bunch of the thinking and a bunch of the investigating and research. And it's just tying it together in a way that you're happy with. Yeah, correct.
Yeah, great. My team, we try not to speak to each other while we do this, just so that we get a broader display of thinking.
Yeah, look, and as long as what you submit to your stuff, I don't mind if you've got a study group or you're all chatting about your ideas, bouncing ideas. I'm perfectly happy with that. As long as you've kind of, as I said, what you submit is what you've done, that's fine. But you can bounce your ideas off each other for sure, both kind of within a group and within the cohort more generally. I don't have any problem with that. So just think, oh, look, am I on the right track? Is this completely crazy? Yeah, that's all fine. Yeah, it's meant to be a kind of I view this as kind of like more a collaborative type subject rather than like, you strictly speaking, you have to be individuals and you can't talk and so on. But we obviously need the university rules limit me to 30% of group assessment, and so that's what we need to do. Hey, Tracy, anything specific?
You kind of answered my question already, because I was just wondering if I can reuse some of the information I wrote for the weekly meeting, for the weekly submissions. And then you kind of answered that already, so that's
100%. Again, it's all designed to sort of I'm trying to avoid, let's call it, wasted work. So I don't want you to do like I could get this so we could do a different company each week, but you're all building towards the major project, and then there's kind of the discussion that you have with me, this kind of the week following the major project submission. So I think it kind of makes sense just to be building on that and at least keep some consistency. And it helps me in the sense that you're not leaving the assessment items, hopefully, you're not leaving the assessment items to the very last minute, because I'm kind of just going to be saying, look, just do a little bit of it this week, then a little bit of it next week, then a little bit of the following week. And that way it makes compiling both this part A and then the major project itself makes that an easier task in terms of your time management. And it also means you've had time to think about it and reflect on it and get some peer feedback, get a bit of my feedback. And to the extent that any of that feedback is helpful, you can incorporate that into what goes into the project. So it hopefully helps you, and it kind of helps me in that we kind of don't have everyone in a panic at the end of the term.
Just one question on referencing, like how should we approach that?
Probably, I'm probably more at the let's try and make a professional report rather than an academic report. So I'm certainly, for the part A, I'm going to be comfortable if you just put a list of references at the back. If there's kind of like a big chunk of stuff that you're copying, if it's from something like the annual report or investor presentation, I'll be kind of, just something, you can just say something like management has said or the CEO stated, and that's all fine. If it's something else that you've been using, just throw that in the back as the references, and you'll kind of be able to see. You'll see when I throw up my JB Hi-Fi one, kind of what I mean there. So it's, as I said, this is more thinking about how you present it to kind of your boss if you're working at a consulting firm or a bank or whatever, rather than this is not being submitted to an academic journal where we kind of want the inline references. So it's kind of like, let me know if you've used sources, but I'm not hung up on a sentence by sentence. I need strict citations.
Cool.
Let me just go back and I'll have a look at the actual project and I'll see if I can anticipate any other questions that typically come up. Fire away if anyone's got any questions at the same time. Yeah. Oh, look, one question that has come up. Let me just do a screen share, or that does come up. Let me just see if I can screen share. Okay. Can you all see that? Yeah, that's okay. So if we're looking at part 3, I've got, well, I guess, let me just go through. So what am I after? Talk to me about the industry. And when I'm saying, look, talk to me about the industry, you can use any of the tools that you've gone through in your previous strategy courses. You could use 5 forces if you think that's helpful. You could use that economics attribute that I've put in the materials if that's helpful. You can use a disruptive technology analysis if that's helpful. Whatever tool that you think might help explain the industry, use that. So I'm not beholden to any particular tool, but different industries will lend themselves to different analytical tools. So whatever you think is the most helpful one in explaining your industry, do that. Part of the issue that everyone's going to face is, look, how am I going to define the industry? Do I define it narrowly or do I define it broadly? That's always an issue that we face kind of when we're doing these analytical type projects. Is really what you're looking at is how broad or narrow is the industry that my company is currently operating in and likely to be operating in. That's kind of where you want to confine it. As I've said in the materials, you've got things like the stock market measures of industry, those GICS codes, and they go from 2-digit really broad down to 8-digit really narrow. The trade-off that you face when you're using those is that if you're comparing with all firms, and this probably becomes more of an issue when we're doing the ratio stuff, if you're comparing with, say, all firms in a 2-digit, you're going to be capturing a lot of firms that aren't doing the same thing as your firm. If you're down to an 8-digit, the possibility is that you might not have a lot of firms that you can compare with. And so that's always the trade-off that we're facing when we're working out what's the comparison group. But really what I want you to focus on is the industry that your firm's playing in. Kind of, if your firm's playing in a number of different industries, then you might want to kind of weight that by the relative importance of the industry. And I guess one obvious way of doing that is by segment revenue. So if I'm 85% in oil and gas and exploration and sort of 15% in ongoing servicing, you'd focus your analysis on the 85% oil and gas. And you'd kind of say, look, it is also doing here, but it is only 5, 10, 15% of revenue, so I'm not going to focus too much on that. And that's fine. And what I'm really wanting you to think about is the level of competition, because we know that the more competitive an industry is, the more excess profitability is going to get competed away. In other words, the level of profitability, or one way of thinking about it in an economist terms is that prices will get pressure will be on prices towards the kind of the marginal cost of production. And another way of thinking about that is that profitability is likely to be driven towards the cost of capital. And so what you want to be thinking about is, to what extent are there competitive forces in my industry now and in the kind of short to medium term future that would either drive profits, abnormal profits, either high or low, towards that kind of industry cost of capital, Or to what extent are there some sort of barriers to entry that might mean that a firm can generate returns above that cost of capital over the kind of a short, medium, or long term? And so it's that link between the industry level of competition and therefore the industry profitability. So I said a number of different tools that you can use to try and get your head around how that works. Then the second one is, look, we've got the industry. Now I want you to think about how your firm's positioned within the industry. Again, there are different ways that firms can position themselves within an industry. The kind of two common ways of thinking about it is the sort of some sort of leadership. So either a product or a service that, if not is actually differentiated, at least the customers think it's differentiated. And I guess follow on from that is in a way that the customers view as valuable, because if you're providing a differentiated product but the customers don't value that differentiation, then you're not going to be able to charge a premium price. So that's kind of one end of the spectrum. The other is I've got some sort of cost leadership capability, so I can do things cheaper than my competitors, which could be reflected in I might be able to sell for a lower price, and that might have implications about revenue growth, subject to the price elasticity of my customers. Or it might be that I'm not in a position to set prices because the market dominant player does that, or it's a regulated or semi-regulated industry where the regulator sets the prices. It might just mean I get higher margins. And so what we're thinking about here is the nature of the business and the nature of the industry. And down the track, like once we get through this Part A submission, we're thinking about I guess part of what we're thinking about as Part A is the extent to which that's reflected in the financial statements. But really what you're thinking about is to what extent is the strategy reasonable and sustainable in Part 2? And then in Part 3, where we're saying, look, I want an analysis of the accounting quality. And you would have seen in the materials, what I mean by that is, like in a big picture sense, the extent to which the accounting does a good job of reflecting the economics, and by that I mean kind of the industry conditions and also your firm's strategy. We know that you've got to follow the accounting rules, but the accounting rules don't always allow firms to do a good job of reflecting the underlying economics. A go-to example that I've probably put in the material somewhere, Warren Buffett's Berkshire Hathaway. If you go to Warren Buffett's letter in any year to his shareholders, you'll always see in either on page 1 or certainly within the first few pages, he'll say, look, the accounting rules require us to report a net income measure. And we do that. But we suggest that you, the shareholders, focus on our operating profit, which strips away the movements in the value of the shares and bonds that we hold, because the movements in the shares and bonds on a year-to-year basis isn't informative about how we as Berkshire have performed as stewards of your money. And so that's kind of an example of where the accounting rules don't allow Berkshire to do a good job, but what they then do is say, here is the number that you focus on. That's also what you'll see in our discussion in kind of Unit 4 when we're talking about non-GAAP or pro forma or management performance measures. So this is the increased propensity for companies to say, here is a number that we think you should focus on because, and usually it's because we don't think the rules-based numbers are the best number for you to focus on. We'll have a bit of a discussion next week about whether that claim is kind of valid or not, because I guess with these, if the firm is coming up with its own performance measure, the concern that the regulators have and the concern that some media and some investors have is you're just going to strip out expenses to make your performance look better, and you're doing that to mislead. The flip side, or the competing argument, is these numbers are actually more informative because of the way the accounting rules have been changing systematically over time. And I'll kind of show you some evidence on, at least on large samples, where that comes down. And kind of, spoiler alert, on average, over time on the large sample evidence that we have available to us, the claim that the non-GAAP numbers are in fact trying to be more informative does have some evidentiary support. So there is research that supports that rather than it's designed to mislead. But that's where we kind of get the non-GAAP. So if the accounting rules don't allow your firm to properly show how they have performed, then that gives rise to a kind of the supply and also demand of the non-GAAP earnings. I've got then identify and explain two significant accounting issues that may affect the reliability of the financial statements. What I really want people to do there is say, look, what are the main two types of transactions? So what are the main transactions that your company does? And on that basis, what are the main accounting issues that come up? And to give you an example, JB Hi-Fi, what does it do? It sells electronic goods and increasingly kind of homewares goods. So what are kind of the two obvious issues that would pop up on most years? How do we recognize revenue, inventory? Is it there? And how do we value it? They would be the obvious two ones for JB Hi-Fi. More recently, JB Hi-Fi had an acquisition of The Good Guys, I don't know, 6 or 7 years ago, and more recently the E&S, their premium homeware thing that they bought last year. So I'm probably going to say this year, one of the things that I've been looking at in terms of an accounting policy might be the recognition and ongoing valuation of goodwill because they've been engaged in acquisitions. That's kind of more of if your firm is a serial acquirer, then goodwill is obviously going to be an ongoing issue. So that's what I'm looking at there. Then I've got discuss any managerial incentives to manipulate earnings. That's where we go through some of the earnings. I guess the buckets that I've put in the materials. On the one hand, we could have the market-based incentives. That is, I want to report good earnings because I don't want share price to go down if I report bad earnings. It could be I have a bunch of security analysts following my firm, and if I don't beat their consensus forecast, share price goes down, and that makes me sad. It could be I have put out my own forecast, and if my firm doesn't beat that forecast, then share price goes down and I become sad. Or it could be I want to report a profit rather than a loss. So these are kind of all market-based stuff. We've also got contractual benchmarks. So it could be I get a bonus if earnings per share increases more than 10%. And that will make me happy because I've got school fees to pay and I want to take the kids skiing in Aspen as a CEO. So I might want to try and hit that bonus. It might be my firm's borrowed a lot of money and I've got debt agreements, and those debt agreements will typically contain some sort of covenant or clause that says, and in the case of JB Hi-Fi, the restrictive covenants are typically based on total amount of leverage. So leverage can't exceed a certain percent. So the debt is limited relative to assets or tangible assets or some other measure. The other sort of constraint that JB Hi-Fi has is going to be kind of an interest coverage, which again is really common in borrowing agreements. So a measure of earnings relative to the interest and leasing bill has to be above a certain ratio. And so these debt covenants are important because if I breach these, and these are kind of written or based around the financial statement ratios, if I breach those, it's prima facie default on the loan. So the bank could, in theory, call in all of the loan. Now, most companies don't have the kind of the cash on hand to pay out the full amount of the loan. In practice, what happens is that the bank would kind of call you up and you'd have a costly negotiation. It wastes your time as a manager, probably means that the interest rate go up. It means that you're under increased scrutiny. Firms really try hard to avoid breaching those loan covenants. And so that's what I mean about the managerial incentives. There are likely to be a range of different incentives that your companies are going to face. Some might be stronger than others. Not all of them are going to be going in the same way. Normally, people think firms will try and all else equal report higher rather than lower earnings, but I can kind of think of some examples at the moment. If I was Woolworths or Coles, I probably wouldn't be touting, we have got record profits at the moment when you've got ACCC actions against them for screwing their suppliers. So this is what we'll call kind of political costs. So if you're kind of in a politically visible industry or you're subject to regulatory, let's say intervention or regulatory actions at the moment, I don't know, maybe don't jack up the profits to sort of draw attention to yourself. So there are a whole range of different incentives that there might be to, I guess, use your discretion in earnings. And what I'm not talking about here is fraudulent financial reporting. I'm kind of talking about within the rules intervention. And so by that, I mean the accruals-based rules that we're under will typically give managers some discretion. And by that, and I guess the areas, the next part of the question, the areas most susceptible to manipulation, really what I'm talking about there is that's going to be what are the accounting issues that the company faces where there is some discretion? And discretion could be something like, do I depreciate my buildings over 5, 8, 10, or 15 years? Do I adjust the amount that I'm going to put in as an allowance for uncollectible debt on my accounts receivable because the economy's tightening up or something like that? Do I change the provision for warranty expenses and so on? So anything where there's some managerial discretion or choice in the accounting, that's kind of where managers can use that discretion to try and kind of bump earnings up or down. If I'm a bank, the obvious one would be the loan loss provision. So what percentage of customers do I think are not going to pay back their mortgages and so on? Different industries will have different areas of accounting where that's more likely rather than less. If I'm, say, a small retailer that operates cash only, kind of unlikely, but just as a thought experiment, you could argue, look, maybe there's not much scope for discretion there because it's just cash coming in, cash going out. That's really all we're doing. There is little scope for discretion. But that's kind of what I guess what I'm thinking about in terms of that part A. So I don't know. Hopefully that kind of fleshed out what I'm looking for and what I'm thinking about for each of those parts.
Just one last question. This part of the assignment is only based on the first 3 units. I know you mentioned ratios and that.
Correct. Yeah.
Contain it.
I don't need you to crunch ratios for this part of the assignment. Correct. Yeah. Yeah. Look, you might sort of think, I guess, in terms of if you're thinking about profitability, you might just do a quick, I don't know, what's net income or operating income relative to sales or something like that, just to get a sense of where it lies. But no, this is not a ratio calculating exercise. That comes in the full project. And again, for those projects that I've already posted, you can kind of see the sort of ratio analysis that we're after, and we start thinking about that in a couple of weeks. How can we go through that ratio analysis in a systematic way, both in terms of explaining current performance and also as kind of a starting point for what might we expect for future performance in our forecasting. Yeah, but no, this is not a ratio exercise for this one.